Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what goes on behind closed doors in the world of business. And sometimes, just sometimes, it looks like they are trying to raise money in a less than conventional way. Today we are diving into Cingulate Incorporated's latest report and 8K filing. Now, typically an 8K is for big news, the stuff that could make or break a company overnight. Think major business events, acquisitions, bankruptcies, you get the picture, and Cingulate Incorporated does have a few things to report from early February 2026. Before we get into the nitty-gritty, if you enjoy breaking down these corporate filings and getting the real story, make sure you hit that subscribe button. We also have a Discord community linked in the description below if you want to chat with us and other viewers about these reports. So, what is the big story here? Well, Cingulate Incorporated is talking about the sale of their stock, but not in the way you might normally think. They are reporting on sales of stock that were what they call unregistered. This means they didn't go through the full registration process with the securities regulators. They're saying these sales happened between the 6th of January and the 5th of February of 2026, and they were done to pay off debt. Imagine owing someone money, and instead of paying them with cash, you give them ownership in your company. That is essentially what is happening here. They're issuing shares of their common stock, and they're doing it at different prices. For example, on the 6th of January, they issued shares at $4.35 each. Then later in January, on the 28th, the price had gone up to $5.34 per S-hair, and by the 5th of February it was $6.01 per S-hair. This tells us a couple of things. First, they are actively trying to reduce their debt load. Second, the market price for their stock has been moving upwards during this period. While it is not registered, it is a way for them to get cash flow and reduce what they owe. Each of these transactions was exempt from registration under a specific rule called 3A9 of the Securities Act. This rule generally allows companies to exchange their own securities for debt without a full registration, often used when a company is trying to restructure or get out of debt. But that is not all. The report also talks about a significant event on the 6th of February, the very day this report is dated. They completed a part of a private placement of their stock that they had announced earlier. This private placement brought in gross proceeds, meaning the total money raised before expenses of $6.5 million. They're also expecting to close the remaining $5.5 million of this private placement soon, once certain conditions are met. A private placement is another way companies raise money by selling securities to a select group of investors rather than to the general public. This is often faster and less costly than a public offering, but it is also restricted to certain types of investors. Now, let's look at the context of Cingulate Incorporated. They are involved in the biotechnology sector, specifically focusing on developing treatments for various diseases, including cancer. The fact that they are needing to raise capital this way, through debt conversions and private placements, can indicate a company that is in a growth phase, or perhaps facing cash flow challenges. Biotechnology companies often require substantial funding for research and development, clinical trials, and regulatory approvals, which can take years and incur significant costs. As part of the filing, they also confirmed they are an emerging growth company, which means they have some flexibility with reporting requirements. This generally allows them to delay adopting new accounting standards for a bit longer compared to larger, more established companies. This is quite common for newer companies trying to manage their resources efficiently. So, what is the overall picture here? Cingulate Incorporated is actively managing its financial situation. They are leveraging different methods to raise capital and decrease debt. The unregistered sales of stock for debt repayment suggest they are prioritizing the reduction of their liabilities. The completed private placement further points to continued investor confidence, or at least interest, in the company's future prospects. However, the reliance on these types of financing can also signal that traditional public markets might be less accessible or desirable for them at this moment. For investors, it is important to understand the implications of these private placements and debt conversions. They can dilute the ownership for existing shareholders as more shares are issued, and the terms of these deals can vary significantly. Now, looking at this report broadly, Cingulate Incorporated seems to be in a phase where they're strategically raising funds to fuel their growth and manage their obligations. The increasing stock value in their debt conversion transactions is a positive sign, as it suggests the market has some optimism about their operations. However, the necessity of these methods also highlights the capital-intensive nature of their industry. A key risk for companies like this is the lengthy and often unpredictable path of drug development. Failure in clinical trials or regulatory hurdles can severely impact their valuation and ability to secure future funding. On the opportunity side, Successful development and commercialization of their therapies could lead to substantial returns for investors and significant improvements in patient care. My take on this is that Cingulate is navigating a common but challenging part of the biotech lifecycle. They are showing resourcefulness in managing their finances. But it is crucial for investors to watch their burn rate, their progress in clinical trials, and their ability to secure future funding rounds. The $6.5 million raised in this private placement is a good chunk of change, and their expectation to close out the remaining $5.5 million is positive. But the real test will be how effectively they deploy this capital to advance their pipeline and ultimately bring their products to market. Alright, that is our breakdown of Cingulate Incorporated's latest filing. What is your take on these financial maneuvers and what they signal for the company's future? Do you think this strategy is sound? Or are there red flags you are seeing? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord link in the description to join the conversation. Thanks for watching, and we'll see you next time on Corporate Decoder.